As Apple closes in on that trillion-dollar market value, our next guest says Google may still be the better investment here. Joining us on the CNBC Newsline is AlphaOne's Capital founding partner, Dan Niles. Dan, welcome. Before we get to the comparison with Google, on the Apple stock price, did Apple just lay the groundwork to become a trillion-dollar company and sustain itself that way?
Yeah, I mean, Apple obviously has a lot of momentum behind it. It's a well-known name. I'm sure most of us who are talking here have Apple iPhones. And so it's a very easy stock for investors want to buy. I mean, one of the issues with Apple is if you look at it, the multiple's actually getting pretty high at this point. If you look at it on a PE trailing basis, about 18 times. You go back to the end of 2015, it was closer to about 11. So a lot of this move up in the stock is valuation-based. As we saw, the last week, valuations can come down very quickly when the market starts to focus on them as rates are going up and the tariff situation gets worse. So, yeah, they have laid the groundwork
historically for Apple, Dan, but it's not high when you compare it to other, as David mentioned, services business, or as Cramer was making the point last hour, other consumer businesses with Procter & Gamble trading at a higher multiple and growing 1% organic revenues.
That's very true, but this is what you have to think about. So what drives the services revenue? Over half of it is driven by iPhone units. And when you look at iPhone units, they were up about 1% year over year. Now, the ASPs are up a lot, 20% year over year, which, by the way, is the highest on a year-over-year basis in several years, and so that's great. But eventually, the units are what drives things like the warranties and Apple Care and things like that. App Store, obviously, driven by the number of people using the phone. And so what you did see this quarter, even with services growing very nicely, is it went from 31% growth in March to 28% growth in June. I think it wouldn't surprise me to see that decelerate going forward, because the thing that people tend to forget is Apple struck a new search deal with Google back in 2016, and that's really hurt Google over this period of time, but it's really helped Apple as Google's had to pay more. So I think you're seeing that reverse, which is one of the reasons we like Google here, because that's going to actually benefit them going forward. So don't forget that the units that they sell is very important, and that was up 1%. And, the phone industry's really gone ex-growth. I mean, units didn't grow year over year in the fourth quarter for the industry. They didn't grow in the March quarter. If you look at Apple itself, I mean, the units are down pretty significantly relative to 2015 as well. So that's something that's going to affect you as you look out in time. And services, for the fact that they're growing well, still is not a huge percentage of revenues. It's about 25% when you combine it with other, and 18% standalone.
Dan, as you're talking, we did get a tick above 200, which some had been watching for. Your point about the upgrade cycle is well taken, but with 1.3 billion devices installed, I mean, isn't there enough of a bed already there to drive services further?
Well, you have to remember, I mean, you said this right. There's 1.3 billion installed. There's only 7.5 billion people on the planet. You're not growing these units. So maybe Tim Cook's right, and prices don't matter, and we can keep pushing the prices for these phones above $700. I mean, I just find that hard to believe, because the growth is really coming from international markets where, people don't make as much money as they do in the U.S., in India, or in China. So maybe you can keep pushing that higher. I think this holiday season we'll find out. I think it's really hard to push phones at over $1,000 when you're talking about emerging markets where, it's a fifth of the GDP per person that we're running here.
They do have an enormous weapon at their disposal, as Jim Cramer pointed out earlier, Dan, which is just that buyback and that almost seemingly endless amount of cash they can put against that stock to continue to stabilize it at the very least.
That's a really good point. And that's probably the best thing with Apple, is that they do have an enormous buyback. That's definitely helped the multiple go up. Obviously, having high-profile investors like Warren Buffett, buy into the stock has helped people feel a lot more comfortable with it. But, the way I look at it is very big picture. I go, you have a market where you're selling 1.5 billion units a year. That market's not growing. So you've got other big tech companies you can also invest in. So you look at a Google, and I think you saw this morning, there's some talk that they might be able to get back into China. That's a huge market for them. It's not one that they service. That's 20% of Apple's revenues. And by the way, if the tariff situation gets worse, we'll see what happens with China and the iPhones that are that are sold there. So that's a risk. With Google, they don't have any business in China. And so that's something else I think you need to think about, which is the tariff situation, at least with China, does not seem to be getting better. And that's something that you have to put into your analysis of risk versus reward here. And I think that's something to keep in mind as we go through the rest of this year.